Hello students, today we will be discussing a very important chapter under financial management, that is cost of capital. What is cost of capital? We will be going in the subsequent stages, but we have to see this cost of capital is depending upon your various sources of capital. That is your capital structure. Capital structure, simply, though we will be discussing in detail the capital structure in our another lecture, but only portions we have to know that if you see the balance sheet, your capital structure composites both owned capital and loan capital. Which are those loan capital? That is cost of debt, cost of preference shares, cost of equity, cost of retained earnings. That is your own fund. So this composition is the total capital structure of your company. That is owned capital, loan capital and internal capital, if you talk other way. So that means this is the combination of cost and weight of each source of capital. This is the weight of each source, of combination of cost and weight of each. So why we are talking weight? That means every places the source of financing. Suppose your 100 rupees total finance is there, not necessarily that this would be 25, 25, 25. No. So their composition percentage may differ depending upon your capital structure planning. So that in detail we will be discussing our capital structure matter when we will be discussing. Here one thing is that depending upon the weight or the percentage of source of finance, that we will be calculating for that, and finally we have to make it that weighted average. So if it is 30%, it is 20%, it is 10%, it is 50%. So those are, that will be the weights. So this is the basic different source of your finance and your this cost of capital. Here one thing, we generally understand that cost is the whatever the interest we are paying to the for some capital source. So that is that cost is not the amount which the company plans to pay or actually pays. What that? Rather than it is the expectation of the stakeholders. You see that. See, generally as a layman's view, cost of capital means your some capital is there, or you are borrowing some fund from your bank, that the interest rate is the cost of capital what you are paying. But here in business concept, this cost of capital is nothing but your expectation of your shareholders. Stakeholders. Stakeholders means various source of finance. Let's say this is cost of debt. This is also one stakeholder. Cost of preference share capital, this is also one stakeholder. Cost of equity, the promoters, that is also stakeholder. And retained earnings also will be within the organization, that is sum total of your profits. So what is that? It is the expectation of stakeholders. See how much they expect from their investment. If you see that the shareholders' interest is that maximization of their earnings, that is the value of their shares increases, all those things. And similarly other cases also, you have to fix rate of interest you have to give, just a preference share dividend you have to pay, and debt also percentage rate of we will be giving. But in general it is nothing but the expectation from you, not the interest only. How will understand that? Suppose 9% debenture bond you are giving, that investors expect that they will be getting 10%. So in such situation, what they will do? They will subscribe at a discount, but cost to the company will not be 9%, it will be 10%. You understand that? So your expectation of the investors, that is your the cost of capital. Now we will be going for other portions, that is what are your meaning of cost of capital. So cost of capital is the return expected by the providers of capital, that we have discussed, that is repeating. Meaning of cost of capital is the return, that is again we are understanding that it is not the interest you are making the payment, so that is not the cost. So that is the expected return expected by the provider of the capital. Who are those source of capital? That is shareholders, lenders, debt holders. Significance of cost of capital. What are those importance of cost of capital? How we are to get this thing? Evaluation of investment options. How to invest, where to invest, that is the discounting rate with the relevant cost of capital. You see, why we are to discounting concept is there? You understand that 100 rupees after 1 year, today that 100 rupees is not there, so that is the cost of capital. You have to discount that to make a comparison purpose. Financing decisions, which source of finance you have to take it, that is also important. Your finance manager or finance director, he will decide that how to finance they will take, which source they will take it, whether it is from equity source will be more or it will be the capital source will be more. So you see that your safe capital is your proprietor's capital, that is the shareholders fund. So that will be discussing subsequent stage. Designating the optimum credit policy. You see that organization's credit policy is important. So their credit structure, how they will be taking this thing. So that is the capital structure ratio between your own capital and loan capital. So these are the basics of your capital structure. So and your cost of capital. Now we will be going for some little bit other ways of cost of capital we will be discussing here. You see that first we have understand that cost of debt, number one, what we have discussed, there basically we will be differentiating two different ways: irredeemable redeemable. Then here some formulas will be there, in detail will be subsequent stage we will be discussing, because otherwise our discussions will be lengthy. All formulas also we have to discuss for that. Redeemable is that in lump sum, one time, in installments. That is simple. So which is irredeemable, that is you need not to refund, and this is the redeemable, that is the in lump sum stage in installment. So this is your cost of debt. Next one is your these things, your next your point is coming your cost of preference share. Shares capital. Which are the alternatives? Here also irredeemable, and another is your redeemable. Okay, and here also it is in lump sum payment. And another, this is also in installments. You see that we are just broad way we are discussing for that. Now in our subsequent this problem solution session, there are various formulas and methods are there. According to with example we will discuss there. Third point is your cost of number 3 your cost of equity share capital. So under that cost of capital, your different approaches are there. Dividend price, price approach, earning price approach, growth approach, then another two approaches also there, that is your realized yield approach, yield approach, another one your capital pricing model. So you see that in our this discussion level, your total three are the basic source of your capital. Cost of debt, one. Cost of preference shares, this is also one kind of debt form. You see that you have to fixed rate of interest here you have to give it. And cost of equity share capital, this is the different way: dividend price approach, earning price approach, growth approach, realized yield approach, and capital price model. You see that all cases you have to go separate formula wise, and you have to, with solution stages, you have to calculate for that. So if you discuss at a time all those things, it will be little bit this way. Then another portions we will be discussing, last one, that is your cost of retained earnings. Cost of retained earnings. What is that thing, cost of retained earnings? After tax returns to shareholder. If he invests elsewhere. See, cost of retained means after tax return to shareholders if he invests elsewhere. After tax return matlab, you see that either he can keep it in your business or alternative source he can utilize it. So this is the your different forms of capital, and what are the different ways you are making the payment. All those things we are discussing for this thing. आज के लिए हमने इतना discussions कर दिया. We will be discussing this chapter wise in my subsequent classes, all respective so different source of capital with the problem solutions. So kindly do subscribe to my channel so that whatever videos will come will be uploading regular way.